Kelly Harris on with us as well. She's the VP of Corporate Culture. And we have Todd Smith, managing broker. He kind of heads up he's the managing broker of closing. So if you need commissions, you're probably going to end up talking to that guy. So be nice to him. So basically, guys, this is the May version of our broker updates. And I know you guys had emailed us some things that you wanted to talk about. We do have a couple things that we need to talk about. Kind of want to start it off with, I guess we could start it off positive. We'll start it off with positive market trends, what's going on in the market. As everybody's aware, it's still crazy. We have had an uptick in inventory, probably about 500 houses a week or so. But as we all know, there's probably 2 months supply in a market where we need 5 to 6 months supply. So influx of people still, rates are pretty low still, money's still pretty cheap. And unless something crazy happens, I don't see anything changing anytime soon. I mean, we're probably looking at least the next 2 quarters, very similar to the last 2 quarters. So, strap in up for a crazy ride. And that's kind of why these are important for us as brokers, because, we have a couple different hats on us. Todd, I know Todd's still in production, Kelly's in production, I'm in production. So we have that compliance piece, the broker piece, the keep you out of trouble piece. And we also have the agent piece, the business person piece. Like, how do you make money in a market like this, right? And there's 2 sides to that coin. There's the agent side and the broker side. So it's kind of important. It's kind of a delicate balance. And it's also, to me, it's two sides of the same coin. When I say that, I mean, I want to make money, but I also want to keep money. I don't want to be giving it away in lawsuits and paying people at the close of escrow because I forgot to check a box, or I forgot to send something in, or I forgot to say something the right way. So very important for us to cross all the T's and dot all the I's, because that is a money-making endeavor. So Todd, do you have anything to add before we roll into what everybody wants to talk about?
Yeah, I think so. Good morning. I know an analogy we talked about the other day was like an NFL quarterback who, can't just drop back and throw deep on every down. I mean, every now and then you need to take an intelligent sack. You need to throw the ball away because, you got other plays to try to score points. So, we all know turnovers lose the game in the end. And, of course, touchdowns win. So, I look at real estate that way sometimes too. The business part you were talking about is I need to throw deep. I need to score points. I need to make money, but at the same time, I need to read the defense. I need to take what they're giving me. I can't throw caution into the wind, or the coach could bench me. In this case, maybe the commissioner benches me, maybe the designated broker benches me, but it's the old thing of we really sell representation, not houses. And I just, we say that every day to the point we get kind of sick of it, but it's true. And a good example that just came across my desk late yesterday, and we're still dealing with this morning, and just literally right before I hopped on here, we have an agent who's representing a buyer on a new build. Took him down, showed him around, got tired of the resale game, went in, magically registered him with some builder. Now, of course, with the price of lumber, builders are dragging their feet. They want you to bail. They just want you to bail so they can raise the price and sell it to somebody else. They're dragging their feet, no deadlines. And some of those things aren't new to the new build process. I've been in the business for 35 years, and new builds are one-sided, one-way streets. We'll close when we're ready to close, and not a minute sooner. So some of that's not new, but a lot of things that are new. And the buyer is frustrated and now wants to hire somebody else to represent them. Now, of course, without going into the weeds, we're on the record. We're entitled to the co-broke fee. There's a lot of complications I just explained to one of our other brokers. But, we might need to do a referral. We might need to do an escrow transfer. We might need to do a buyer broker agreement with the new broker in order to shore up the referral. There's all kinds of pieces. This is the stuff that we help you with when you have this problem. But at the end of the day, the bottom line is the client isn't feeling like they're being represented. And I think our agent's probably doing a fine job. I don't know the details, but the point is that, we can't just sign them up. We can't just show the house. We got to service the deal from sign up to sign down if it's your listing, and from contract acceptance to COE if it's your buyer.
100%. And that's really where I want to get started on some of this stuff today. Is I know a couple people wanted to talk about inspections and waivers and what people are doing to get deals for FHA clients, stuff like that. And really that just leads me into like counter offer tips and how to make an offer that is acceptable to the seller, while also protecting your buyer as best you can. And, this is a conversation I have probably, I don't know, 4 or 5 times a day. When an agent calls me, my client asks me, they want to, how do I waive X? How do I modify this? How do I do that? And my first response is always, okay, that's great. I'll tell you how to do that. But what I want you to do right now is I want you to go email your client and say, hey, these are the things you're telling me to do. This is what could happen if it goes bad. This is what you're waiving. And if you want to proceed, please respond to the email and we will draw it up.
Yeah.
And why I'm doing that is because they have to give us a written instruction.
Mm-hmm.
And if we're out there, I want to keep this positive, but I also want to remind people the 100% best way to save yourself time, money, lawsuits, complaints is to make sure everything's in writing. Make sure if you have a verbal conversation on the phone, follow up with a text. If you have a verbal conversation on the phone, recap it in an email, make them respond. If they're instructing you to do something that you think is absolutely insane, email it to them and say, respond. Please respond with a yes or a no. I mean, that would save probably half the phone calls that we get would stop right there because we have something in writing. That's the first question I'm going to ask you if you call me. Do you have it in writing? Did they tell you to do that in writing? What do we have? And if it's no, they told me on the phone, well, that's, you're probably going to get me to do a long sigh. And then I'm going to sit there for a couple seconds and think about what I'm going to say, but it's going to be not as good as if you had it in writing.
Right.
The answer is immediate. Okay, great. Show them what they told you to do. So Todd, looks like you have the My Agent portal up for our counter offer.
Well, yeah. I mean, to speak to that subject, on the My Agent portal on the dashboard, at the top, you can scroll down and then there's, of course, the newsletter or whatever we think is hot at the moment. We've been busy doing a lot of videos, little short ones that are 1 to 3 minutes long about these various points. So since this call, we don't want to make this call 90 minutes long or turn it into a 3-hour CE class. When we're done today, if we didn't hit one of the subjects you wanted to talk about, many of these are already addressed here. So this might be a featured video or a featured article that, Andrew or myself or John possibly, was trying to get out there. But also if you go down to the broker department tile, and if you were to click on that, then you can get into, of course, the hotline and the helpline and the phone numbers, but also My Broker Corner. And this link right up here, this URL is where all these videos, as they're being released, pretty much they go out in the newsletter or they go out to Mastermind on Facebook first, and then they get posted here so you can go back and reference them. And, one of the ones I recorded last week was on multiple counter offers, and they were some tips. And if I can kind of just go into those right now. It was sort of a reverse of how you could make a more attractive offer right now without completely waiving everything. So if we were just to take a second and think about buyers and sellers, they have opposing interests, right? They do. The sellers want the most amount of money with the least amount of hassle. That's not new. They want peace of mind. That's not new. In the 35 years I've been around, sellers want peace of mind. Cash deal. Why else would they accept less money sometimes for cash if it wasn't because the perception is it's going to close? Even though in my experience, I saw more cash deals fall apart than financing deals fall apart because those buyers typically do more inspections. They look at the roof, they look at the AC, they look at the electrical, they look at the plumbing, and there's more deal breakers in the front end to a cash deal than there is. Now, I'm not talking about wholesale investor cash. They're buying at a discount. They're buying a distressed property. I'm talking about a retail buyer paying cash. The probability of it falling through during the inspection period is greater, but the probability of it closing once we cross that threshold is way higher. So some of these tips, and if we reverse this a little bit, for example, and some of these things came from the 2005 market we were in that was a little bit similar to the one we're in now. And maybe that was a 30-mile-an-hour wind and this one's a 60-mile-an-hour wind, but it was similar. And one of the things as a mortgage lender at the time, we knew we'd have to do an appraisal for any loan. So we didn't want buyers to waive the appraisal contingency, if we could avoid it. On the other hand, sellers wanted them all to waive the appraisal contingency, just like they do now. They wanted them all to waive the inspection period, just like they do now. But as a mortgage broker who served real estate agents, I kept saying to them, hey, listen, we're in the risk management business. You aren't not going to want to be recommending that. You're going to want to be recommending something else. So somewhere between full appraisal contingency and full 10-day inspection period and full BINSR, there's a few modified versions I can share with you that could either be in the offer or they could be in the counter offer, depending on which side you're on. One would be with regard to the inspection period. Shrink the inspection period, take it back from 10 to 7, take it down to 5, take it down to 3. We know there are 50 things in the 13-page buyer advisory, not just one that's a general home inspection or 2 that's a termite inspection, right? The due diligence process is 13 pages of stuff. So shrink it, don't waive it, because you're still going to need a BINSR either way. And it gets complicated when we make it 0 days, because technically your BINSR is due at the time of contract. And we're going to be asking for that. So shrink it if you have to. With regard to the BINSR, instead of, accept, reject, or give the seller an opportunity to correct, we see contracts all the time that says the buyer agrees to accept the home as is with no repairs. And it's like, really? Because there's a seller warranty in the contract that says the seller has to repair and maintain the property so it's in substantially the same condition at closing that it was in at the time of acceptance. And if we say as is, no repairs, we could be negating that seller warranty. So rather than do that, we could say that the parties agree that the buyer's options on the bin, the front end of the BINSR process, will be limited to accept or reject. That's it. Those are my 2 choices. So whether it's a 7-day inspection period, I race everybody out there 1 week off the market and I'm either all in or I'm all gone. I'm all done. That might be a modified version of a full inspection period, a full BINSR process. And very similar to that on the appraisal, whether then waive it completely, the contingency completely, or, keep it full, especially when you're offering over asking price. It's not a secret that the seller who's listing today is listing a little bit above the last sale because the market is trending up and inventories are low. On the other hand, every appraiser I know is looking at the current list price going, oh crap, how are we ever going to get there? Right? You're at $950 and the last sale's $920, and then someone comes in and pays $1 million. They're paying over list price. You can almost bet that appraisal will not come in over list. So if you were to look at section 2L, and I don't have it in front of me, but one of these videos talks about this and talks about appraisal contingency. I think you can see it down there towards the bottom, one of those tiles, and they're adding more of these as we speak. But basically, the section 2L of the contract says it's contingent on an appraisal obtained by the lender for at least purchase price. What if it said or blank? And you were to substitute list price? My house is listed for $450. You want to pay $475 and finance it? Okay, but show me the other 25 grand, because there's no way it's going to appraise for more than $450. So if it comes in at $450, $55, $60, $70, whatever it is, you're still paying me $475. So, a counter offer from a seller might be buyer agrees to waive the appraisal contingency, but a counter back might be that the parties agree to lower the bar. That's all I'm saying. And we did a lot of that in 2005, 2006, and it was just modifying the appraisal contingency. So those are just a few tips. I'm sure Andrew has a few more he could add.
Well, Todd, I want to circle back to the inspection one that you talked about. And, I know right now as listing agents, I know there's a few listing agents on here that every seller wants as is, no repairs, and that's fine. That part of it's fine. But what I would never advise my client is to make the buyer waive an inspection. Give them their due diligence, give them the inspection period, because all that's doing is increasing liability. increasing the likelihood that they're going to find something 3 days after closing that they're going to be really, really pissed off about, that could have been, and they could have decided at that point whether or not they wanted to move forward or not. So you can ask them to, like Todd said, either accept or reject the premises. But as a listing agent, I would never, ever want my seller to make them waive the inspection. I just think that's a recipe for disaster. And it's really not, it's not in their best interest to do so. It's not in their best interest to waive the spuds, to waive any disclosures, to not provide a um, insurance history. That's not in the seller's best interest. And us as agents and fiduciaries need to understand that when they tell us that, we need to explain to them the other side of that. It's not all about what's the easiest for them. It's also about protecting them, so in 2 years they don't get a lawsuit. So waiving those things is just, I just don't think it's smart. If you want to shrink that, if you want to say, hey, you can submit something, but we're not going to do anything, you could walk away if you want, but here's your, you have all the time in the world to do the inspection if you want to. But I just don't think, in my opinion, I would never suggest that to any of my clients. And I would never let my buyers sign an offer with it zero unless they were explicit that they didn't want to do anything. That was their direction, their instruction. But on the sell side, I would always recommend, hey, send an inspector over there. Or even if you put zero, you want to do a home inspection, do a home inspection. I would prefer someone do that over not doing that, because it's just, right now I think we're on the precipice of a tsunami of legal issues, with all the contracts that I see every day, all the issues that I see on a daily basis. um, the amount of issues that could come up should this market turn, right? Should the market turn and take a flop, and now in 2 years your buyer's coming back to you, and why did I waive that appraisal? I paid $37,000 over asking and now it dropped 100 grand, and you
Yeah.
told me I should do that to get the house.
Yeah.
Or the buyer comes back to the seller, and the seller made them, in a counteroffer from the seller, said, you're waiving the inspection period, you're accepting the property as is, and by the way, I'm not giving you a disclosure statement, and by the way, I'm not giving you insurance history. Well, now in 2 years, they find something that could have been discovered or should have been disclosed. You're going to get a lawsuit, and you're going to be named in it as the agent, and they're going to come after us as a brokerage, and it's going to be a mess. And it could have been avoided had the seller disclosed, had the buyer been allowed to do an inspection. I don't think it's not going to lessen the odds of the transaction closing. I mean, if there's a major problem, you don't want that transaction closing anyway, unless the buyer knew about it and agreed to close. I mean, that's my opinion on that. And maybe it's because I'm seeing this stuff every single day, and you guys, maybe your guys are just seeing the contracts and want to get escrows done, but I just don't see a good reason to waive the inspection period to zero, or to not allow the buyer to do an inspection. It's not serving the client. It's not, and it's certainly not serving your seller. It may feel like it at the beginning. It may feel like that when you're accepting that contract. It may feel like it when they're getting their check, their wire after you close, but certainly won't feel like that when you get a letter from a lawyer. So,
Yeah. Yeah.
not trying to scare you guys, and we're trying to get you ways to accept contracts, but we would like to also give you the pros and cons. I mean, the pro is here's a way to modify the contract so you're not waiving away your rights, you're not giving away the farm, you're protecting your client and being aggressive. But the con of that is, if they advise you and tell you that they want to go the other way, you better be prepared with, this is what could happen if you waive inspection, this is what happens. If you waive spuds, this is the information you're giving up. You send them a blank spuds. This is the information you said you didn't want the seller to send you. So it's a tit for tat. It's a business practice versus fiduciary. It's a constant struggle. It's a constant tug of war between getting the deals done and protecting your client as a fiduciary. Because sometimes we have to do and have those hard conversations with our clients, because sometimes our job makes us protect the clients from themselves, because they may think they want to do that, but they haven't thought it through. They haven't thought through the entire process, because they're not the expert. We're the expert. We need to advise them as such. And that's, as a broker, as the DB, I would much prefer the client calls mad because you cost them a deal because they think that you're not being aggressive enough, versus you got them a house and now it's falling apart, or now they're pissed off because they should have known something and they didn't know it.
Yeah, it's like that that one friend of the family or whatever it was I was working with a month or two ago when I first came over here, and they were contingent on closing the sale of their home out of state, and they were contingent on new financing. And after missing out on a few deals, I don't know if some guy at Starbucks or somebody told them, "What, you're crazy. You need to be making an all cash, full price, all cash offer, waive everything." And I honestly wouldn't write that. I can't put in no financing. I can't put in no sale contingency if that's what I know for a fact they really need to do. So they wanted to work with somebody else. And, because we had a buyer agreement, we negotiated a release of the buyer agreement in exchange for a referral fee agreement. And they went on with some other agent who wrote the deal. And, I don't know if they have a rich uncle or how they pulled it off, but fortunately the sale of their home closed. The loan closed, and they were able to close on a 30-day all cash deal with no contingencies. Doesn't mean they can't do that if they have the wherewithal, but as far as everything I knew, they didn't have the wherewithal to make that offer legitimately. But I think you said it great when you said, your job is to protect the client from themselves, the people that want to get crazy and sort of throw the baby out with the bathwater on things. Similar to our job is to help you, protect against yourself from, just doing that. We hear this all the time. Well, I told them on the phone, they probably shouldn't wait. Yeah, but did you get the email? Did you get the text? I mean, I say every time I talk to a prospective client, does that sound fair to you? And check your email. I swear it sounds like a broken record. Does that sound fair to you? Check your email. What do you mean? Well, we just got off the phone and you said you wanted to, not complete a SPUDS. It says right in the ER, you will give us a completed SPUDS. Arizona law requires the seller to disclose material facts. It says in the purchase contract, you will give a completed SPUDS to the buyer. So you're telling me you want to waive two things and maybe three? Check your email, right? I don't know if I'll ever take a listing with a waived SPUDS personally. And if you think about that for a second, then how could I let that same seller turn around and agree to no inspection period at all? I think no inspection period at all creates liability for the seller and in turn, the listing agent and the listing broker. So I'd be reluctant. I did a deal for a bank a few years ago on a bank-owned property, and it was a distressed situation. The guy moved out there. It was ugly. It was one of those deals from 2008 where they probably were going to go up in the attic and cut trusses or something. They were so mad at themselves or the world or whoever it was. So they take it out on the lender or the lien holder. This was just a few years ago, and I'll never forget, the bank officer didn't think they wanted to complete the SPUDS because they didn't want the liability. And when I told the bank president that there's actually more liability when you don't complete it, he immediately came back and said, well, we can do a limited SPUDS. And then I was like, well, even then, they ended up using the last page of the SPUDS to write that the bank foreclosed on the property a week ago. The officer of the bank has never even seen the house. They've done their best to answer every question, but that the buyer is encouraged to use the full 10-day inspection period and the 13-page buyer advisory to answer any unanswered questions or to address any concerns at all they have with the SPUDS. And the bank insisted when someone came and made an offer with waiver or 5 days, they countered back with 10-day inspection period. Now that sounds crazy to some of you, but it's because the bank didn't want the liability. No one can say a year down the road, we didn't give you an inspection period and we painted the SPUDS with it, right? And it was in the counteroffer. Sometimes on a counteroffer, you've probably heard me say before, the messenger is more important than the message. And what does that mean? Who wrote it? When the bank counters back and says, oh, no, we're not doing a 3-day inspection period. We're going to do a 10-day, that sort of thing. And oh, by the way, you're going to give me a clear final walkthrough prior to COE. That was the other thing in the counteroffer, which might lead to some of those counteroffer tips we were talking about earlier. You want to share a few of those?
So hold on real quick, Todd. So someone text on the chat. Does a text message count as in writing or better to put an email? It's always better to put an email.
For sure.
Text message is a last resort, but always better to have an email.
Yeah.
I would say that because a phone number can change, but an email address, I mean, should it go all the way to the very last, that you could at least search down an IP address?
Well, how about that example the other day? We had an agent. What was it? The agent who showed a property and there was an Amazon package at the door or in the countertop or something.
Yeah.
And someone who apparently came in, I don't know if it was a housekeeper or who it was, came in after that and took the contents and left the empty boxes. Sure enough, the seller or the listing agent discovered it, and the last person on the record of being there was our agent. And so now there's $200 worth of stuff missing. And remember what happened was he tried to tell us he has a text from the agent saying, no problem, I'll take care of it. I didn't take it, but I get it. It was on it happened on my watch. I'll take care of it. He didn't want the hassle, but remember he said we said, can you send us the email confirming that? And what did he send us?
A screenshot text message.
And whose name was on it?
Mine.
Yours, because he forgot the agent's name or he mixed you up instead of, I don't remember the guy's name, if it was, Arthur instead of Andrew or some A name, Adam, or I don't remember who it was. But the point is now that would be arguable. So for me, a text is better than a conversation. I mean, a conversation is better than nothing, right? There's step one. A text is better than just a conversation. Well, I told him on the phone 3 times. Yeah, you're going to have selective memory. But an email would be even better because now we can trace it and when it was sent and the whole nine. So for sure, when we say get it in writing, we're going to mean an email for sure. If not, just some other agreement. Speaking of which, on the ER, and we know there's a new ER form that came out a month or so ago, and we are going to be requiring that form. Did we set a date on that?
June 1st.
June 1st. Okay. So we're giving people about a 2-month window to use the old or the new, because for the most part, the form is the same. The formatting is a lot different. It's designed to look more like the AAR forms in the purchase contract. I mean, half the time I look at a listing, I'm like, what's this purchase contract doing in here? And it was really the thrust behind it was to make the personal property and fixtures section mirror the purchase contract, which has changed over the past couple of years. But I think it's important to know that, for example, your pact with ARMLS as a card carrying member is that you will make all listings active within 2 business days of execution. So if someone signs a listing contract today, it goes in the MLS by Thursday night. Okay. That's just a membership rule, unless what? Unless the owner of the property directs us in writing not to do that. So in the additional term section of the ER, you'd always have to have a line that says the owner instructs the listing agent not to go active on MLS until further notice, until the yard's cleaned up, until the landscaping's been trimmed, whatever it is, right? Whether that's indefinitely or next Thursday or whatever it is. So similar to that one, which most of us know, we can just piggyback on that for everything. The owner instructs the agent to what? Even if it's an email. Hey, per our conversation, you instructed me to put a coming soon sign out today, which means I have to put this in MLS by tomorrow now, one way or another, as at least coming soon, right? So get in the habit of the party instructs the agent, instead of when we get calls and I told I was going to cure them and I'm going to counter and I'm going to issue, really, I always ask the agent, are you the buyer or are you the seller? Oh, no, it's my neighbor, but I'm going to, well, not really. You're going to advise the client what his 3 options are, and he's going to instruct you which one of those. And like we talked about the other day, Andrew, they are the ones who win or lose, similar to that football quarterback we talked about earlier. For Tom Brady to pull back and throw deep 3 plays in a row when he knows and has been reading the defense all afternoon, the only way that's happening is if Belichick says, run this play 3 times in a row or I'm benching you. That's the only way, because guess what? If the coach instructs the player, he needs to listen. If the principle instructs the agent, we need to listen, unless it's outside our code of ethics or illegal or something like that.
Right. Well, since we're talking about the ER, Sherry asked a question. She has a signed listing agreement, and can he legally hire another realtor? No, not during your period of time. You have a listing agreement. It's a bilateral contract that cannot be unilaterally canceled. So if he sells the property or conveys it in any way, you get my home group would be owed commission. So
yeah,
that's
well, it's an irrevocable employment contract, right?
exactly similar to a buyer broker agreement.
I think some people forget that part, and I always, when I teach classes, I always talk about a good friend of mine, Russell Shaw, who goes on the radio and says, I'm not bragging, I'm interviewing for a job. And if you don't like it, you can fire me. Really? Come on, Russ. You use the same ER we all use. How does he do that? Well, Russ isn't a liar, if you know him. He's kind of fun and crazy, but he's not a liar. They have a line in the additional terms section of the ER that says something about the Shaw team's commitment to you is satisfaction guaranteed or whatever it is. And if at any time you're not happy with the results they're getting, you agree to meet with Russ over at Tatum and Shea. And if you can't resolve it, he will personally terminate the contract, because we do have a provision in the ER that we can unilaterally cancel the agreement for cause at any time, but the owner of the property can't. They'd have to negotiate mutual cans. And this is no secret. If it's that way in the listing contract, what other contract can the owner not unilaterally cancel at any time?
Purchase contract.
The purchase contract, right? And it sounds crazy as a homeowner myself. What do you mean I can't fire the real estate agent? I own this place. Yeah, I know you do, but you signed a contract. What do you mean I can't cancel this buyer? He's being a jerk to me. And we got 3 other. Nope, you signed the contract, right? And so unless there's special language that says either party can cancel this agreement at any time, owners need to understand that they cannot cancel either one, but they can negotiate early termination of either one, and their chances are they're going to write a check to someone to do it.
100%. So, hey guys, I want to open it. We got about 25 minutes left. Is there before we move on to something that we want to cover, does anybody have any questions about anything we covered or anything else that's on your mind? That you haven't got an answer to, that you're curious about, that you want our opinion on? Does anybody have anything like that for us? You can unmute yourself. You can put it in the chat, however you want to do it.
I know that somebody talked about, I think that when they registered for the class, they showed Kelly a tip that they wanted to talk about FHA and VA offers. Mm-hmm. Should we go there for a sec?
Sure.
I threw a screenshot up. Can you see that?
Yep.
Section 1C. And this one is something I wrote for an agent the other day. I keep kind of zip form up on my screen all day, and I can type things in there. And this was somebody who was making an offer. It was cash, but it was contingent on the sale or the closing of the sale of their home in Michigan. And I think a lot of times people think that if it's not a new loan, it's cash. That's not true. A true all cash offer means I have $1 million in the bank today. If a house is listed for $950 and I make an all cash offer, let's just use that example real quick. Line 10, $950. Let's say line 11, earnest money, $50,000. Well, the balance due on line 12 would be $900,000. And instead of additional cash at close of escrow, I don't know who taught that 30 years ago, but that was poor terminology. It's not cash. You're not walking into the title company with $1,000 cash earnest money. They don't take it. It's additional available funds delivered to title prior to COE. What does available mean? Here's my $1 million Schwab statement in my hand today. The 50 is going to title tomorrow, and the other 950 is on hand to meet the 900 plus I need at closing. And in this case, their money, more than half of it was coming from the sale of their home in Michigan. That's a contingency, and it needs to be spelled out right here. So let's use the same example. 950, 50,000 earnest money, $450 in net proceeds from the sale in Michigan, and then 500 in additional available. Here's my Schwab statement. That is a cash contingent offer. And so we need to use 1C. And there's a video back on the broker, corner tile we talked about before about section 1C. Show me the money. If I'm the owner of the property, before I sign a contract that I can't get out of, I need to know exactly where the money is today, not where it's going to be, not that you're going to rob a bank or win the lottery and come up with it somehow. I hope. I want to know today, where's the money? Otherwise, I'm sorry, get off my lawn a little bit, to exaggerate, to make a point. I'm going to take my house off the market for the next 30 or 45 days and sign a contract with you that I can't directly get out of. I need to know the plan, right? And so does the lender, by the way, which speaks to your FHA and VA a little bit. I'd pull up a different screen right now to show you that. But, FHA and VA, what's the problem? Why don't sellers want to take the FHA or VA offer? Go ahead and throw your thoughts down in the chat session, and Andrew and I will share with you our ideas. Andrew, what's one reason as a seller you wouldn't accept an FHA or VA offer right now?
Well, two reasons that come to mind quickly is the FHA or VA are mandatory.
Okay.
You can't waive appraisals.
Right.
And then the idea that FHA and VA appraisals are somehow different or find lower values than the conventional appraisal would find.
Right. So the FHA appraiser or VA appraiser can often call out repair items, right? Yeah, exactly. That, by the way, there's great articles on the AAR website. Most of them I have at my fingertips if you email the broker department. One of them is called Don't Be Fooled. So all you got to do is go to AAR online, and we can throw that website address out on the chat for you. But AARonline.com, and just the cool part about it is it's like your own private Google search engine for Arizona real estate. Don't be fooled. What comes up? An article about sellers saying, hey, don't be fooled by these buyers that are waiving the appraisal contingency or agreeing to non-refundable earnest money, because if it's an FHA or VA buyer and for some reason the lender ordered appraisal comes in light, they cannot be forced by federal law to forfeit their earnest money. That's the FHA amendatory clause. That's the VA escape clause. And that's maybe one thing, but I would say not every agent knows this, and certainly most sellers don't know this. I think the other article on the AAR website is the one that talks about, I think I can actually share this one with you real quick, but it talks about the FHA or VA required repairs. And in this particular example, if the appraiser called out some sort of a rotting on a door sill to the man door or the side door to a garage, does this, and all of a sudden now that becomes a condition on the loan. Does the seller have to agree to that? That's the question. Do they have to agree to that? And if I share my screen with you right now again, I'll show that to you. Sorry, I didn't have some of these already up for you before we started this today. Might have been helpful, but they're not required to make these repairs. They're not required to make any requested repairs, whether it's the buyer on the Binzer or the lender as part of the condition. But on the other hand, if they want the deal to close, it isn't going to close without these, right? And so, we also are always careful about keeping repairs on a Binzer and never in an addendum. But if the lender is the one calling them out, an addendum is perfectly fine because they already know about it. So the seller agrees to replace the leaky hose bib and replace the rotting door sill on the garage prior to COE. That's perfectly fine because the lender is the one who's driving the bus on these issues. But I think you're right. Those are probably the main two reasons. The other reason between why a seller wouldn't want an FHA, VA, or even a high ratio conventional loan, 95, 97%, is because for someone to pay mortgage insurance or to pay the FHA MIP versus PMI or to pay a VA funding fee, for them to pay the premium to do that is usually because they don't have the extra money. And if they don't have the extra money for the down payment and they're paying a premium to get one of these high ratio loans, then the question is, what money do they have to make repairs if the seller doesn't want to make them? What money do they have to close the gap on appraisal shortfall if the appraisal comes in low? So I had an example with an agent last week who called, said a VA buyer was well-heeled, wanted to take advantage of low interest rates. The house was $300,000. They want to offer $325,000, and it was her listing. And she said, my seller's a veteran too, and he really kind of wants to do this deal, but he knows about all the stuff. And I said, you know what? What if they countered back? They can't counter appraisal waiver. They can't do that, or non-refundable earnest money. It isn't going to hold up. But what if they countered back that the VA buyer would agree to show them proof of funds for an additional $25,000? The difference between the purchase price and the list price, knowing full well it's probably not going to appraise for more than list, and knowing they've got at least the ability and hopefully the desire to pay over, because nothing precludes them from paying over in a hot market like this. Does that make sense? So that was the counter offer to the VA buyer. I want to sell you my house. I wasn't born yesterday. If you can show me an additional 25 grand in reserves, I'll accept your offer. And if they have it, great. Doesn't mean they're going to use it, but at least we know they have it. And if they don't have it, sorry, next please. And they're moving on to the next buyer.
So Todd, you want to touch on, Amy asked a question about VA offers. So you're a former lender. When do you have to send the mandatory out?
Well, it's required prior to closing for the VA buyer by the VA lender. But I think because of the market we're in right now, we're seeing them sort of non-traditionally send them earlier on, because I think they know, the lenders know, at least the ones that cater to the purchase market, they know that a lot of buyers are waiving the appraisal contingency, or they're agreeing to non-refundable earnest money. And the sooner they get that word out on the street to the parties, the better. And so traditionally, though, this came out with the closing docs 3 or 4 or 5 days prior to closing. You know, we talk about the week of closing, and that's one of the other videos that's probably worthy of a watch. It's the week of closing, and we really need to be better about understanding that. Technically, the buyer agrees to sign docs 3 full days prior to COE. If COE is a Friday, that's Monday. And technically, that's when the seller agreed to have any repairs made. So the week of closing is very important. But yeah, they're going out sooner and sooner. Again, that's a pretty big issue. Highly encourage you to look up the article on the AR website. Don't be fooled.
So she's asking, you don't have to send that with the original offer, right? It's not a requirement.
No. But it should be, it's kind of understood that the listing agent should be aware if an offer comes in with FHA or VA financing, they got to know that a mandatory clause and that escape clause is part of the deal. And whether it's now or in the middle or at the end, they're going to have to know that's part of the deal. And that's certainly why some sellers are avoiding FHA, VA. I think we've covered the main 3 reasons there.
Right,
I know some. Go ahead.
People want to say to get it accepted. I mean, unfortunately, there's no way around those 3 things that we were talking about. There just aren't. It's just we can't waive appraisals. We can't, if they come up with conditions from the appraiser, we can't help with that. The only thing I will say is that I don't know if you want to say that theoretically or in practice or best case scenario, most appraisers are just an appraiser and they're not looking at a FHA, VA, aside from the condition of the property. So the price that they arrive at should not be affected by loan type. 100% should not be affected.
It shouldn't be. And this maybe kind of bleeds into another section. I just put on the screen, section 2K. And, a lot of people misunderstand this section too, that, as a lender, if we were pre-approved somebody for a loan and they made an offer subject to, let's just say it was 90% conventional. And then for some reason they sold their car or their boat And prior to closing, they decided to put 20% down and change to an 80% conventional to avoid the cost of mortgage insurance. All the buyer would have to do is notify the seller using the notification form in zip form or transaction desk that we're changing the structure from 10% down to 20% down. We're staying with conventional. We're staying with the same lender. This is not going to cost you more money. This is not going to delay closing. Think about it like changing from a 15-year to a 30-year fixed or something that simple. One little click of the button by the lender and it's done. And in that regard, when I've been on the committees with AAR all the way back since 1990, one of the things we said was a simple change like that should just be a unilateral notice from the buyer to the seller because they're making the deal better for the seller. But when you go from, 20% down conventional to 10% or to 15 or 5%, or when you switch from ABC to XYZ, I can almost guarantee you it's going to delay closing because it's a new lender, it's a new appraisal, it's a new underwriter, it's a new income tax rollout, whatever it is, and it's probably going to delay, in which case you've got to have the seller's permission. And that's what 2K says. You need an addendum to the contract that says the parties agree that we're switching from lender A to lender B. We're switching from this loan to that loan. And when we get this question about FHA and VA, somebody's always creative in trying to beat the system. And they're like, can't we just write every deal as if it's conventional? And then we'll just send them a notice saying we're switching to FHA. Really? Think about that for a minute. You're going to switch from 20% down conventional. You're just going to spring on the seller that we're suddenly going minimum down FHA. And suddenly the amendatory clause is going to just pop in with it. I don't think so. That's not going to happen unilaterally. That's going to happen bilaterally through an addendum if it does happen.
So Katie, I hope that what Todd just said kind of answered your question about changing from cash to a loan. Yes, if I see in your comment that you said they do have seller permission already. So yeah, you would want an addendum that the seller acknowledges and accepts that you're switching from cash to conventional, pre-qualification attached, et cetera, et cetera. And the reason the lines 105 and 106 are the most important lines of that and most misunderstood lines of that section 2K. Mm-hmm. It says you should only make any such changes without prior written consent if such changes do not adversely affect buyer's ability to obtain loan approval without PTT conditions, et cetera, et cetera. So does that mean that if your buyer wanted to go from cash to conventional, he couldn't do it? Absolutely not. He could do it. But if you wrote a 2-week close, then you better damn well close in 2 weeks with that conventional loan, and it better not cost the seller anything.
Yeah.
And that's why that provision is there, is to make sure that you don't do cash 2 weeks and then all of a sudden you're springing conventional 30 days on somebody.
All right. Andrew,
otherwise everybody would do it.
I think a good point here is that when we talk about waiving the appraisal, we're talking about waiving the contingency, not the appraisal itself. When we talk about switching the loan from, I'm just going to call my lender and switch from FHA to conventional, no big deal, or the other way around, let's just say, doesn't mean I can't do it. But it just means that if I get caught and I can't close, what a savvy seller is going to do, instead of dropping a cure notice at closing for failing to close on time, they're going to drop a cure notice for failing to get their permission to switch lenders or switch loan programs. And now that can become incurable. If you can't pull a rabbit out of the hat and close in 3 days, they've got you cooked on that. Because you can't go back in time. You're not Michael J. Fox, I'm not Doc Brown here. We can't jump in the time machine and go back and get their permission 30 days ago. We didn't get it and we were wrong, and now it's going to hurt, right? So I think that's a big one. Somebody asked me one time, I often say as a lender, it sounds like a joke, but I used to specialize in doing loans, jumbo loans, conventional loans for cash buyers. People are like, what do you mean? That doesn't make any sense. No, they would go write a cash deal. They had the $1 million in their Schwab account. They would write the 950 offer with the 30-day escrow and the 10-day inspection period. And they would negotiate the deal and win because it was cash and the seller liked the sound of that. but they would call me and say, hey, bud, I hope you're ready to rock and roll, because if you can get an appraisal done in the next week while I have my inspection period, and you can get my tax returns and all my stuff assembled and to the underwriter in 2 weeks, and you can get a loan approval and docs out in 3 weeks, I'd rather close with a loan and use other people's money. But I signed a cash deal, and by gosh, I'm not going to forfeit 50 grand earnest money. I am closing in 30 days, one way or another. That was a hot seat for me. You want to make a point on $1 million loan? You better hustle. And you can't afford the whole, well, the underwriter got held up on the tax returns and the K1s, and now we need another week. There is no other week. Perform. And I knew that the week of closing, man, I had 3 weeks to take that deal from application to docs out. And that was tough. But so don't get me wrong. They don't have to have the contingency if they don't need it. And it doesn't mean they couldn't do a loan or an appraisal. It just means they can't make it contingent on the appraisal. They can't make that deal contingent on the loan unless they wrote it that way in the first place.
So someone had put on their post-possession. What specifically was the question about post-possession? Was there anything specific about it? Now we have on the My Agent portal, we're asking you to call the broker hotline or email the brokers, because we do have, if you guys have seen a couple of the videos that I've put out there from AAR, Scott Trianis, he's one of the main legal guys on AAR, and we have a statutory obligation to disclose in writing to our buyers and sellers who are entering in post-possession or pre-possession that they need to consult an attorney, an accountant, or any other service provider that they would deem pertinent prior to executing that agreement. So what does that mean? Well, that means we have to let them, it's essentially, we need to let them know the risk in writing, and it's our obligation to do so. So that's why we're asking you to email us. We'll send you the agreement, but we'll also send you the article from AAR that says, hey, here's the risks, here's what you should know about pre and post possession, and make sure that they make an informed choice, because essentially that, especially a post possession, that's an agreement that happens after close of escrow, that happens after our fiduciary and agency has ended. So they need to be on board with doing that and understanding what those obligations and requirements and risks are. I mean, there's a substantial amount of risk involved in either scenario for both parties.
Yeah. Well, if you direct your attention back to the map or My Agent portal for a second, you can see that under the agents section there's the office documents tab, and over that there's specific folders of forms, and one of them might be broker specific documents, and one of these might be pre and post possession. And to speak to what you just said, what you're going to see there, if you go to that, is you're going to see a little blurb that ideally we want. If you ever watched the Scott Drucker, little ice cream truck go by, pre-possession, post-possession, no, hold the phone, don't do it. It's a little bit heavy-handed. We're trying to filter that down a little bit and say, look, we don't prefer either one. I'll take 10 posts to 1 pre. In my career, I saw post happen a few hundred times, and I can count on one hand the number of problems that occurred. On the other hand, I only saw pre a dozen times, and I can count, it takes both hands to count the number of problems that occurred. So pre is definitely worse than post. But we want you to email us, because number one, we're going to tell you probably need an addendum to the contract to modify section 1E, which is possession, because it started out that the parties were agreed to immediate possession, which is COE or recording. So number one, do we need to modify 1E? Number two, if it's 30 days or less, we want you to use and request our pre or post possession, let's say post possession agreement. We don't want to make the parties a landlord and a tenant. But if it's more than 30 days, Arizona, the Arizona Landlord Tenant Act, or we call it ARLTA, rules come into play, and now we need an AAR lease. And then number three, most importantly, what Andrew just said, we need to share with you the article. And I know one of the brokers likes to share the little video of Scott Drucker, but we need to share with you the article about risks associated with pre or post possession. And I can switch over to that real quick. and show it to you right now, but it basically is this article right here in front of you. Pre and post possession carries additional risk, blah, blah, blah. We want to share that with you so you can share that with the client before they execute the addendum to the contract to change from immediate to post, and before they execute either the post possession agreement or the AAR lease.
Well, it's funny too, because a lot of sellers are asking for it in this market, because they need to find a house. But then we send them this, and we send them the document, and they say, "Oh, wait, never mind, we'll figure it out." Because they don't want to deal with it. Because they don't understand what the risks are, what they need to do, how they need to keep their insurance, et cetera, et cetera. So we only got a couple minutes left. So Nicole, if title company requests, the commission instructions request. So you can fill it out and send it to them. It's not going to be signed by me, but you could tell them that they're going to get signed instructions from my home group, signed by me 5 days prior to closing. They will get instructions. So I know, and it's funny because I know that some of the largest brokerages in the state do exactly the same process that we've adopted. And it's just funny to me that they're having such a heartache from this, because there's so many brokerages that do the exact same thing. And they're not getting commission instructions from HomeSmart. I can tell you that. They're not getting commission instructions from, Keller Williams. They're not sending them. They're sending them their own document. So
yeah, I keep trying to explain that to them, and I'm getting such pushback about it. Like I've even sent them like a blacked out version of like what I have had from previous transactions. Like, look, this is what you're going to get. A couple of days, you're going to get an email to you. And they're like, nope, we need commission instructions.
Yeah.
But I guess the question is why, right? I mean, why do if you're the listing side, I could maybe understand it. But if you're the buyer side, like, you don't know what the list, like, who cares? Our commission is guaranteed. If it's on the MLS, our commission is guaranteed by the MLS. So whatever instruction we provide to them is what we're going to get. I mean, I don't understand what the issue is with that. Like I said, if you want to fill it out, it's not going to be broker signed. I mean, if they'll accept a non-broker signature, then, feel free to send that over to them, but they will get something with my signature on it. It's just going to be 5 days out. CDA. I don't see what the pushback is, because
I know, and it's 5 days.
Yeah, 5 days out. They'll get something.
That's what I keep telling them. They'll get it 5 days, right?
The week of closing.
Yeah, and so here's the other thing I'll say. So if there's something that has changed the commission, right? You're given a credit. We have specific other forms for that we don't want you to use a commission instruction for that. We have a broker to broker commission agreement. We have a gifting instruction letter. Like, if something has changed to the co-broke, or something has changed to where you're gifting something, we have other documents that we will sign, but it's just not going to be a commission instruction, because that's not the proper place for that to go.
Well, and by the way, I mean, in the past 10 years, I've been a licensee as I crossed over from mortgage lending to real estate. I was with 3 different brokers, and, they're big ones, the biggest ones, probably 2 that are as big or bigger than us. And they don't do commission instructions. One of them sends an order to pay to title 3 days prior to closing. The other one sends a CDI, commission disbursement instructions, 4 days prior to title. What are we doing? Well, at least since I got here, we adopted the plan of no more commission instructions. Let's send our CDA, commission disbursement authorization, which is the same thing as an order to pay, same thing as a CDI. I think Keller Williams calls it a DA. It's disbursement authorization. They're all the same thing. The broker is telling the title company, here's what we need you to pay us and or our agent. And if the file's complete, it goes out, pay the agent X, pay the brokerage Y. If the file's not complete, it goes out saying pay the brokerage Z, and we'll divvy out the agent's share once the file's complete, which we hope is always before it closes. That would be a great goal. We know that's not realistic. I'd say I'm trying to help us raise this bar from 60 or 70 or 80% to 70 or 80 or 90%. We're streamlining the process. Shane sitting right behind me. You know, he's looking at every SkySlope file when it comes in. He's looking to see if he can add a note. Hey, it says the MLS says owned solar. Is that with a loan or is it free and clear? Anything he can do to give us a heads up front as agents and brokers that we might not need something, that we can clear the buyer advisory, we can clear the wire fraud advisory, anything we can do to streamline the process to improve the chances of that CDA going out 5 days before saying, pay the agent X and pay my home group Y.
I guess the point is this is not a new process for them. And I just don't understand why there's so much pushback. I mean, what's funny, even before this, I've worked with title companies that the file closed, there was no commission instruction. They never even asked. So I know it's not a company-wide. It's got to be escrow officer specific. It's not company-wide because some of them I've never signed one, never gotten a signature. Yeah. And they just paid, they asked in an email, hey, what's the commission split on this? And then they paid it.
Well, I think they have their cheat sheets, you know, and I think they have, when it's home smart, we need that order to pay. They have their little cheat sheet of what it's called. Oh, it's Keller Williams. We need the DA signed by the MCA or whatever. I don't know. They got their acronyms. They got their shortcuts. And I think for 10 years with my home group, they think they need CIs signed by the DB. And this is the way we've always done it, Andrew. I mean, you can't argue with sound logic like that. Hey, that's the way we used to do it. And it's a waste of time. It slows down the process. And there's a new sheriff in town and we're doing it this way now. And it's designed to be better and faster and stronger. And we can rebuild him, you know, and if you're old as me, you know, I'm talking about the $6 million man.
It's really to save everybody time, right? I mean, it's an extra email and an extra step that you don't have to send it to me. I don't have to send it back to you, and then you have to send it back to the escrow company when we're already going to do it regardless. Yeah, we're already going to send it out. So why? I mean, why the hassle of having to do it three extra times? It just doesn't make sense. So yeah. I mean, short answer, I'm sorry that they're bothering you for it, but
yeah. Well, you made a good point though. Nothing says you can't pull out your crayon, you know, your box of 64 that you had in kindergarten and write in 3% to us and 3% to the other guy, but the details will follow, you know, not official, you know, and XO and love Tommy, you know, go ahead, send it to them. It's a preliminary, you know, idea of what the CDA is going to show, but it is not the details. It is not a direct authorization. It's you giving someone a heads up. It's the preview to the movie. It's not the movie.
100%. Well, guys, we ran over about 5 minutes. I hope everybody got some kind of value out of this. If you guys have any questions, you can always email brokers@myhomegroup or call us on the broker line. Other than that, guys, have a great day. And thanks for being an agent with My Home Group.
Watch the videos. Oh, by the way, there is something coming up. I don't know what it is, but marketing is putting a code word or a code symbol or something in a couple of the videos. And there's going to be like a drawing or a contest for, I don't know if it's an Amazon gift card or what it is. Kelly probably knows. Maybe it's the Amazon logo. They haven't told me what it is, but they're going to work it into a couple of videos that I do or that Andrew does. And the first agent that discovers it in emails marketing or post it on the mastermind or something is going to get a prize. So check it out. But that's not the reason you should watch the videos. And I'm not the reason you should watch them. You should watch them because they're great little short quips on the exact subjects and the calls we get every day.
Exactly.
Awesome.
All right, guys. Thanks so much.
See you later.